everybody. Welcome to Trading with Ashley Show. I am very happy to explain to you something that I have come up with that actually is helping my members, and it's helping me a lot in my portfolio. And it has to do with my favorite stock, Palantir. So it was a few months ago that I noticed that Palantir was at a critical level of support. And so I had alerted my members and I told them that I was going to be purchasing a Leaps, and I am going to enjoy that long-term price appreciation that a Leaps brings. I have done several videos. I'll leave my favorite one at the end that explains this in great detail, but you can leverage a Leaps and actually double or even triple your buying power for your favorite stock, and you can enjoy the price appreciation for a lot less money than actually buying the shares. Now, part of the reason that I love selling puts so much is that I don't have to deal with the dynamic of when to take profit. So when you sell a put, you get a defined premium. And if your sold put expires worthless, you get to keep 100% of that premium. So it takes the guesswork out of it, and it's really a more relaxed way of trading. But I must say, I do like the unlimited potential when you purchase a Leaps. And so I have found a way to solve for the issue of how I like to take profit along the way, and I like to allow to keep a good runner running. And so if you had been in my community and you took these plays, you're up well over 200% and up 300% on one of them. But basically, what I have done is I have come up with a fun little term to describe shorter dated calls, but not so short that we have to deal with time erosion. As most of you know, if you purchase a call, one of the negative things about doing that is you have to deal with time erosion. It's called theta decay. Well, if you sell a call, you don't have to deal with that. If you sell a put, you don't have to deal with that because you're the benefactor of it. But when I'm talking about purchasing calls, that's always top of mind. So it's real important if you purchase a call and you're not going to be able to just watch it constantly so that you can get out of it at the appropriate time, that you go at least 3 months out. Because once you get to 45 days from expiration on a purchased option, that's when the time decay accelerates. And what that means is even though the stock may be at a healthy price point, if it's kind of stalled out or going up slowly, once time decay kicks in, time decay will erode your option faster than price movement will if things are kind of normalized. And so that can be a vulnerable place to be because you could be losing money even though your stock is healthy. And so to solve for that, I like looking at purchasing call options about 3 to 6 months out. Now, to make it easy on my community, I came up with a completely different term, and it's a little play on words. So we have the Leaps, and that's a long-term anticipation equity security, but I envision somebody leaping ahead when they are purchasing a Leaps or selling a Leaps because it's a year out. So skips is what I call them. They're shorter term call options, 3 to 6 months out. And it stands for safely keep increasing profits. And that's a skip. It's a shorter form of a call option, but not so short that it erodes time decay. And my anticipation on any of these call options is to be out of the play, completely out of the play, within 45 days of expiration. But what it helps me with is taking profit along the way. So let me show you what I'm talking about. If you are looking at my particular plays right now, I've got this one play. It's 5 call options. It does not expire until January of 2026. So we've still got a lot of time in that. But look at this. We're already up $20,000. That's a 373% increase. And so some people will see that, and my students and I will discuss it, and they're like, well, are you going to take profit on that? And I said, well, no, because there's so much time left in this. And of course, I am of the belief that Palantir is just getting started. And so although we saw some incredible price action today, I think this can definitely continue to run. So my solution to that is what you see underneath it. Look right here. I have a Palantir call option. This is one of the skips I purchased. It does not expire until March. And I had alerted this in my community, so a lot of my members are in this. And this one is at the $55 strike price. Well, look, it's already appreciated 177%. So, as we approach that 45-day mark or before, so probably sometime in early January, I will go ahead and take profit on this particular one. Well, that'll be great because it'll more than likely be worth close to about 10,000 if Palantir continues to push forward. And if so, that'll be a great opportunity for me to lock in some profit, and the leaps above it will keep earning money as I'm locking in profit. And then look, you can see I went ahead and purchased one for June as well. I like staggering these along the way so that I can take profits along the way. So when we get close to 45 days out for this particular call option, I'll take profit on it as well. And what I'll do with the funds is I will wait for pullbacks in the stock, and then I will purchase additional skips that keep pushing out a little bit further. Now, we've got to discuss what happens with this Palantir leaps that is not expiring until January of 2026. We have a few options. That's what I love about options. We can, at that point, just simply, we bought it, we can sell them back, and then we get to keep the difference, as you see right here, and it will be worth substantially more by that time. Or we can exercise the leaps. Now, exercising a leaps is basically a placeholder that you put on the stock that you want, in this case, Palantir for $20, and I could exercise it, meaning I take ownership of stocks. I'll buy the stock, Palantir, for $20 a share, even if it's trading at $100 a share. I can get it for $20 a share. Now, why would you want to do that? Well, there's a few reasons. Now, this particular leaps is in an IRA, so I'm not as worried about taxes. But if you cash it in by just simply selling it, then you do have either a long-term or short-term capital gains. But if you exercise it, you're having to pay additional monies to turn that leaps into shares. And at that point, you're avoiding the capital gains tax. Now, I am not a CPA, so check with the CPA, but that's my understanding. You can basically kick the can down the road because instead of taking the profit, you're actually buying something at this point. Another reason you may decide to exercise it and actually purchase the shares is that you believe there's quite a bit of life left in this stock, and you like the thought of having the stock in your portfolio, or you can start selling calls against the stock. We actually sold some calls against some of our Palantir shares today that were in our account that we are using for wheel strategy. So I have a buy and hold account that's separate from my wheel strategy account. And it was great because I was put some shares of Palantir not too long ago. And so now we are selling active calls against them. And the main reason is I want you to look and see where Palantir is in its price life cycle. Right now, we are at the top of the band and we are over 70 on the RSI. So that is the perfect condition to start selling calls. But I do want to caution you, I do not like going out more than 1 week when I am selling calls on a stock that can be super volatile, especially with Palantir, because we could find out, at the close of business day tomorrow that there's another great contract that has come out with the government, and that could send it soaring yet again. And so when you're dealing with stocks that you want to ensure you get the most out of the price movement from when you acquired the stocks to when you're actually willing to give them up, you definitely want to consider only going 1 week out. And the beauty of this is if these shares are called away, and it's forced profit at this point because I have a lot of equity built up, then because of the point in their price life cycle that they were called away, it's not very difficult for me to just wait on a little bit of a retraction to purchase them back below my call away price, okay? So that's the way you have to look at this. If it is, let's say, at the bottom of the Bollinger Band and you're selling calls in the middle of the Bollinger Band, well, then there's a good chance it could blow through your strike prices. And so that's one way I handle that, and I minimize that feeling of that I'm giving up a stock that I want to hold on to. The other thing that's great about when you have it called away at a reasonable price that is very generous in its price life cycle, it's at the top of that band, you can go in boldly selling brand new cash secured puts, and you could go just at the price that they were called away or $1 below, and you still feel like you are getting a great deal because you're reacquiring your shares and you're getting paid to do so. And there's just something that happens when you boldly go in with an aggressive strike price at the money, and the premium you get is incredible, and you don't panic if you're going to get assigned the shares because, again, you wanted them anyway, and you're happy to get them below the price that you gave up your original shares. So there's so many ways that you can play this and you can work this. If you are interested in hearing more of my insights like this and different tips and tricks to get outsized gains, consider joining my Discord. We do have an incredible, bustling community. We met today and we brainstormed on a lot of good trade setups for this week and next. So I would love for you to be part of all the fun. Remember, if you are trading with Ashley, there is no trader left behind. Now, I had promised you one of my favorite videos. I am going to post that for you right here.